Welcome back to Factful Finance. Let me ask you a question. What if you've already signed an equity release agreement and now you're feeling uncertain about the long-term impact? It might seem like the decision's final, but it's not the end of the road. In fact, this is when it's most important to know your options. Equity release, while offering some immediate relief, is one of the most significant financial decisions you'll make in your lifetime. Once you've committed to it, you might be wondering, can I undo it? What are my options if I change my mind later on? And how can I protect myself from potential financial traps as I move forward? In this episode of Home Equity Release Exposed, we'll break down exactly what you should do if you've already signed an equity release agreement, the potential risks you face, and how to protect your financial future. Let's start with the basics. Understanding equity release agreements. Equity release involves using the value of your home as collateral in exchange for cash, which is often repaid when the property is sold. Sounds simple, but there are hidden costs and implications that many homeowners overlook. For instance, interest rates can accumulate quickly, and the longer you stay in the home, the more you'll owe. Now, if you've already signed an agreement, you might be facing a situation where the reality of the decision is setting in. Step 1. Assess the terms of your agreement. The first thing you need to do is review the fine print. Yes, the fine print, the part that we often skim through. Look for any clauses that discuss cancellation, repayment, or cooling off periods. While it's uncommon to back out of an equity release once it's been signed, there might be ways to address certain aspects, like renegotiating the terms, especially if you're in the early stages. Take Jane, for example. Jane, a 67-year-old retiree, signed an equity release agreement to access £50,000 in cash to cover living expenses. After several months, Jane realised that the interest piling on top of her debt wasn't what she anticipated. In her case, she learned that she had a 14-day cooling-off period with the contract without penalty. The moral of the story: always be aware of the specific terms and timeframes in your agreement.
Step 2.
Speak to a financial advisor. This is critical. If you've signed an equity release agreement and feel like it might not be the right move for you, don't hesitate to reach out to a professional financial advisor. Preferably, look for someone who specializes in retirement planning or home equity. A certified financial planner will be able to give you unbiased advice and may suggest ways to mitigate any potential damage. They might even recommend alternatives, such as downsizing or seeking other forms of financing. Henry, for example, was in a similar situation. After signing up for equity release to fund his retirement, he realized that the impact of his decision was far greater than he initially understood. His advisor recommended looking into other options like a retirement interest-only mortgage, which gave him more control over his payments and avoided the rapid increase in debt. Step 3. Consider repayment options. In most cases, when you release equity from your home, you don't need to make monthly repayments. Instead, the loan is paid off when the property is sold or after you pass away. But what if you want to reduce the impact of the loan sooner? Here's where things get tricky. Equity release agreements often have no early repayment charges, but that doesn't mean you're free from all costs. If you've already signed the agreement, ask the lender if it's possible to pay off the loan earlier than anticipated. Some lenders allow for voluntary partial repayments. This could lower the overall debt in the long run, especially if you start paying off the interest early. Step 4. Check for alternatives to equity release. If you're unhappy with your decision, it's important to explore alternatives. In some situations, transferring or selling your home and using the proceeds to pay off your existing equity release loan may be a viable option. The proceeds could also be used to move to a smaller home, thereby reducing your debt. If you're near retirement, you may want to consider adjusting your budget or finding other income streams to help reduce reliance on your home's equity. Let's look at another example. Olivia. Olivia took out an equity release loan in her late 60s. After some careful consideration, she decided she could manage with a smaller monthly income, so she opted to sell her house. The equity release debt was repaid and Olivia moved to a smaller property, which significantly reduced her financial stress. This move allowed her to maintain more control over her future finances. Step 5. Understand the long-term impact. Before making any drastic decisions, it's crucial to understand how equity release impacts your future. Since you're not making regular repayments, the debt tends to increase over time due to compounded interest. The more you owe, the less your heirs will receive when your property is sold. There's also a risk that property prices may not appreciate as expected, meaning that the value of your home may not cover the total debt when the time comes to sell. It's a hard truth, but understanding it could help you make more informed decisions down the line.
Final thoughts.
If you've already signed an equity release agreement, you're not without options, but it's crucial to act quickly, whether that means renegotiating the terms, seeking professional advice, or looking into alternatives like downsizing or repaying the loan early. In the end, empowerment comes from knowledge. The more you know about how equity release works, the more control you'll have over your financial future. Remember, this content is for educational purposes only. Always consult a certified financial professional for personalized guidance tailored to your specific situation. Have you been in a similar situation with equity release or any major financial decisions? Drop a comment below. I'd love to hear how you navigated it. And if you found this video helpful, don't forget to like and subscribe so you don't miss the next part of our Home Equity Release Exposed series. Want to dive deeper into financial strategies that can truly safeguard your future? Click the video on screen now for more insights.